Here they come now, and in fact, it is a lower revision than what we saw for the final numbers. 2.7% on GDP. This is on an annualized basis for the first quarter. As I mentioned, the prior readings were at 3%. Personal consumption also coming in lower than expected at 3%, and the core PCE coming in pretty much in line with expectations, slightly above at 0.7%. Mike McKee is here with me, our economics editor. Mike, what do you make of this lower revision?
Well, it looks, Betty, to be pretty much all a result of our own consumer spending. Consumers spent a lot less money, 3% as opposed to 3.5% gain in the initial print of this. So that seems to be the biggest change. Also, a little bit of a drop in business investment of about 0.5%. It was originally reported as a 1% rise. Exports better than expected. Imports, though, greater than expected. So even though we spent less, we spent more on imports. That's a drag. And in terms of inventories, they rose a little bit more than expected. So that's an offset to that. When you look at it in its entirety, it doesn't set us up for growth quite as much in the second quarter as many economists had thought. Personal spending was lower. Inventories are a little bit higher. So all in all, not particularly good news.
No, not good indeed, and you're seeing that reflected in the markets, Mike. Right now, S&P futures are lower at this point. The S&P futures are down by about 0.2%. Dow futures off by 17 points. So not a lot of good news, and for those who are worried about the economy, this is even worse news for them. But Treasury markets, the bond markets are just gaining a little bit right now on this news. You can see the yields going down for the 10 and the 2-year. And the safe haven currencies that are always bid up when there's these worries about the economy, well, they're rising right now, particularly for the yen.